Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we look at the week that was, we can see that all three major indexes, the Dow Jones, the NASDAQ, and the S&P 500, all fell for the week. Dow Jones fell a little bit over 2%, whereas the NASDAQ and the S&P fell just a little bit more than 1%. What's interesting about that is with this 2 weeks of pullback, we saw the VIX raise 10% as it traded above 20 for the first time in about a month. We also saw that inverse relationship with the market down, the dollar rose 1% for the week. That is also, as you compared it with our forex traders, against what was going on in the Eurozone. So we saw some movement there. The Euro is down to 1.26, pretty much close to the lows of 2012, close to the January lows. We also saw crude oil fall 2.5%, hitting that 96 wheelhouse. Remember, we talk about that channel 96 up to 102. We're now at the bottom of that 96 channel. And gold fell over 3.5%. The important news of the week is we saw some data out of China showing slower growth, and the strength of China really had led the international market for years, and over the past 6 months, maybe even up to a year, we're seeing the slower growth there in China. Of course, the big news of the week was at the beginning of the week we had the JP Morgan announce a $2 billion trading loss with one trader. And then later it came out that it could be up to $3 billion, down to $1 billion. And basically what it is they bet on credit. And what's interesting is that, again, they're on the losing side of a trade for a change, meaning the big banks. And so the other side is still riding it out as things are going over there in Europe. So they're still in whatever trade or transaction, and the other side that's winning just hasn't let them off the hook yet. And of course, this week we had the Facebook IPO, basically pricing Facebook at $100 billion, already making it bigger than McDonald's and Disney. Now it wasn't the biggest IPO ever. It's the biggest internet IPO, but Visa still is the biggest IPO in history. So it priced at 38, and for the most part closed just above that. Economic news, really not much going on. There was a surprise reading in the latest consumer sentiment survey, coming around about 78, and they were expecting just above 76. Overall, the big thing in the market was the JP Morgan and the continued instability of the Eurozone. As we go into next week, we can see that the earnings season pretty much is over. Most of the big stocks have reported. We do have Lowe's, Best Buy, Dell, and Toll Brothers. Toll Brothers used to be big. Back in the early 2000s when the housing market was going crazy, Toll Brothers really had a lot to say. And even at the beginning of the crash, because remember, so much of America's wealth was built in their houses. Economic data this week, you can see really light. Maybe Consumer Sentiment on Friday might say something. So what we have here is light data. And so that's, as you know, I go to the international, I go to Forex and see what's going on there, and also see what's going, again, the instability in the Eurozone, in Greece, and France, that can affect our market when we don't have any catalysts. So we're going to start by looking at that relationship of the big three market sentiments, dollar, gold, crude oil. And you can see the dollar is now trying to retest the 2012 highs of a little bit above 82. We went up to 82 and got a little pushback there. We'll see if this support can hold up here just below, just above 81. And see if we'll continue to see that strength. You can see over here our point of control at 81.445. Definitely have some volume resistance right in here, but a little bit more support here at 80.746. So we'll see what happens here in that range. But look at that move on the dollar. Once we broke this little downtrend line, we certainly took off there. Again, strong dollar, gold, a little bit weak, coming to test the 500 moving average. Zoom in a little bit here for you. Once we broke out of our 1660, 1600 price range, we kind of fell off. Did get a little push up here, but again, we'll see what was support should be resistance. So we'll see what happens here at 1600. Definitely sideways, maybe even sideways or down, although we do have 2 days up here. Finishing off with crude oil, again, breaking back down. Hopefully we'll get relief at the pump. Broke into our 102.96. You can see it tried its best to hold up 96. Broken below that. So the next support is, I believe, let's zoom out. Oops. So the next area of support we have here is just at 90. Sideways are down on crude oil. Woohoo! So let's pull up our charts here. We're looking at the daily chart of the S&P 500. And you can see this big move that we had down here. I didn't do a video last week. I surprised my dad for his birthday. So didn't make a video last week. But what we did talk about the last time we got together was, you know, if we break through here, through 1345, we said we're coming down to the 50 moving average. More specifically, we said we're going to come down and test this swing low. And that's exactly where we closed on Friday, 1295, 1297. So I think it's important for us to defend this for the bulls. For the bulls out there, we want to defend this 200 moving average, 200 moving average, and we want to defend 1300, the psychological barrier of 1300. We have put in some lower highs. You can argue that there is a crazy looking double top or a crazy looking inverted, I'm sorry, not inverted, a crazy looking head and shoulders pattern in there. But overall, on our daily, we are now finally seeing our indicators get into the oversold level. It's been a long time since I've been able to say on the daily chart that we're oversold. But when we zoom out and come into our weekly, you can see where now we're sitting at the 200 moving average. I'm getting these indicators mixed up today. My red is the 50 moving. I'm getting the 50 and the 200 mixed up. On a weekly, we're sitting at the 50 moving average. And you can see after that, we're coming potentially all the way down to 1217. So there's big room to fall here if we don't, again, defend this support level. But our indicators have room to go. As a matter of fact, check out the daily. The daily really gives you an eye into what could happen here. Not the daily. I am really tripping today. I'm sorry, guys. The monthly is what I'm trying to say. We take a look at the monthly, you can see we put in our doji here for the month of April. In May, we've already taken out the low. We've already taken out the low of April and March. That's bearish. And our indicators have plenty of room to continue lower on the monthly chart. So that's something to look at. Where our monthly charts are overbought, plenty of room to go lower. And our daily chart is oversold. So remember, we're looking for that dual time frame agreement. We'll come over here to the NASDAQ and also switch to the daily. Give us a look at 2002, 2012, as I stumble today. And you can kind of see we've already broken down below that last significant 2012 swing low. But we are still trying to defend the 200 moving average also here on the daily, and of course our indicators are overbought, oversold. What is I guess I'm trying to rush. I'm taking my kids to the carnival. I need to focus. Here we are sitting at the 50 moving average here on the weekly. Again, plenty of room to go lower, but what I really want to show you is the monthly chart. And again, you can really see, put in a doji for the April, and not only have we taken out March and April, but now we're taking out February. So we're close. We're close to taking out all the gains for 2012. The NASDAQ, and the NASDAQ is the best one. The NASDAQ was up 10%. if you remember from the beginning. But our indicators have plenty of room to go on the downside. So remember, we have a week of little catalysts on the stock side, on the economic data side. So what's going to drive the market? Let's take a look at our industry leaders. All right, so as we look at some of our industry leaders, we're starting off with Apple. And Apple, you can see sort of a double top, definitely have a lower high put in here, double top. And once we broke that neckline of this double top, you can see we're starting to break. And if we break, because we had strong moving up, I mean, this 520 here matches up with this little swing low in here. So there is potential for us to bounce here. But if we break there, we have to start thinking, again, like the market, that we may come down here and test that 200 moving average. For those who've been looking for a place to get into Apple, we may get that buying opportunity soon. Amazon. Amazon got up on earnings. A smaller double top going on here, but we broke back into this range between 220 and 196. So it looks like that's where we are. Both Apple, Amazon, going to have to say down. Google. Google doesn't quite have that double top going on here. We had some sideways price action going on. Burst out of that. Interested, we got a move up here this week when the rest of the market's moving down, but it came immediately right back in with the market. So sideways on Google. Goldman-Sachs gave up the ghost. It finally made a move up, and it's really given almost all that move back. All this 2012 move is pretty much giving up. And again, remember the news of JP Morgan, supposed to be one of the industry leaders. Goldman Sachs is also, and it's giving it all up. And you can see this little support that was put in here. Buyers found a little value here, but we've already broken that. So really makes sense for us to test this 87. And also notice that we're already below the 200 moving average. IBM's trying to hold on, and it's put in its little double top going up here, but it hasn't really given up the ghost like you've seen other ones. It's trying to hold up here at 195. We have that in as a support resistance level. If you break there, we'll look at the 190. Sideways to down on IBM. Intel, been following IBM's chart, but Intel has already broken through. Now it's in this 27 to 25 price range. You can see all this little price action in here, and we've broken them below that, so it really makes sense for us to come down and test this 25 price level. Sideways are down on Intel. MasterCard, one of our better charts, and it's given up the ghost a little bit here. Made a new high all the way up here, 467, but coming all the way back down here to test this 385, 386 price level. Sideways to down on MasterCard. Netflix had already given up the ghost and just kind of going sideways now. Sideways to down on Netflix. And finally, Priceline. Again, one of our another great stocks that we've been watching. It has broken some of this, what you could call a neckline on this double top. Definitely sideways to down. Watch this 200 moving average on Priceline. Approaching our education spotlight, we talked about the last time we got together, the edge, and what is your edge? How are you defined as a trader? And of course, the question becomes, if it was simple as having an edge, why aren't all traders successful? Or another way of rephrasing that is, why is it difficult to follow your edge? Why is it difficult to follow your rules? And there's a couple things. It all has to. Somebody asked me, I'm working on a book with someone, an ebook, and they asked me, what's the difference between a mindset and an edge? And an edge is your advantage. It's your setup. It's your back-tested system to give you positive expectancy in your trading. But your mindset is your ability to follow your edge. And so why is it difficult? Well, those emotions, internal conflicts, the need to be right versus the need to make money. I want this trade to work versus cut your losses and live to trade another day. Your emotions distorting your perception. Staying in a trade when your system says get out, but your emotions say stay in. And constant exposure to ambiguous data. You have to know what to watch and what not to watch. Funnel in, funnel out. I used to tell new teachers, You know, when you're new to teaching, there's so much going on, so much paperwork, so much going on, and you need to know how to funnel in, funnel out, and you need to be able to go home. The thing about first year teachers is that they stay 18 hours at school, you know. And the same thing for new traders. They get so involved in all of this data, all of these indicators, all of these setups, and they get into analysis paralysis. So those are a couple things. We're going to share some more, but those are probably the big three. The need to be right, skewing your perception, and allowing you to look at data that you don't even need to be bothered with. Please comment, like, and subscribe. Check out our Facebook channel, Are You Financially Literate? A lot of positive information there. You know about our resources, our coaching, help you develop that trader's mindset and help you define what your edge is. We have our managed forex accounts for you, and we have some for our stock traders. We have a real good stock trading system and tip for you to help you get down the road to being a profitable trader. In the end, it's not about the system or the tips. It's about your ability to develop a trader's mindset to follow your edge and pull that trigger. We can help you do that. Look forward to talking to you guys next time. Thanks, guys, and I'll see you next time.